Hey there again, Stephen Wade here with another short but very helpful tutorial for you. One that really could change the way you look at the market. Now we'd like to kick this little video off with a question. Have you ever wondered why you're not as consistent as you want to be as a trader? In fact, you might be wondering to yourself, will I ever get this down? Or what am I missing? What am I not doing that winning traders seem to be doing? Now we've been at this quite a while now. One of the most common concerns we hear is, no matter what I do, I just can't seem to be consistent. In fact, you may have even found yourself saying, you know what? I've got the best darn trading system in the world. All you have to do is sell every time I buy or vice versa, and you'll win almost every single time. Tell me that doesn't sound like your experience. Now we can all chuckle at that a bit, but I almost guarantee that we've all said that at some point, and you might even still be saying it now. And you know what? Those are very valid questions and concerns that all traders have likely struggled with, and really, we're no different. Years ago, before we really put our system all the way together, we were in the same situation, asking ourselves the same questions. And the truth is that the answer we discovered is so simple. Now, the training in this short video is what we discovered to overcome this issue. Now, as you watch this video, you'll see that what we're talking about will help you view the market in a new and more profitable way. And what we discovered to solve this problem is what we call the general market rules. All the smartest and most profitable traders very much pay attention to these rules because they have a very high tendency to generate profitable trades. And who knew that profitable traders actually prefer to stay profitable, right? So the more you trade like they do, the more you have results like theirs. Wouldn't you agree? Now these rules have existed since the beginning of time. Well, not really that long, but at least since the beginning of trading, and they exist in every market you can trade in. For example, like stocks and futures. So you might be wondering, how do we know these rules actually work? Because we follow these rules every day to make the 80% plus accurate trade calls that we do for our members. Now if that's not reason enough for you, we totally understand. Let's go see what Paul Tudor Jones has to say about tops and bottoms, also known as support and resistance. Now you probably already know this, but Paul Tudor Jones is one of the most successful traders of our time. In 2014, Forbes estimated his net worth to be about $4.3 billion. So he knows a little something about trading, and here's what he had to say about tops and bottoms. I believe the very best money is made at the market turns. Everyone says you get killed trying to pick tops and bottoms, and you make all your money by playing the trend in the middle. Well, I've been missing the meat in the middle, but I've made a lot of money at tops and bottoms. As you can clearly see, the best traders, like Paul Tudor Jones, are aware of these higher time frame support and resistance levels and understand how they work. Now, when we originally developed our system, it was pretty good. We had pretty decent success with it. But if you're at all like us, you like to improve and make things even better. So once we discovered these rules and applied them to our trading system, that is when our trading system really became consistent in the long term. Now one quick little bit about rules. Have you ever thought about how important rules are? You know, some people like to think that rules are always meant to be broken, but picture how chaotic life would be without rules. The reality is, rules are meant to keep you safe. Take, for example, the little white lines painted on the road called a crosswalk that tell drivers to stop when someone is crossing the street. When, like this woman, you're the one crossing the street, you sure want the driver of those cars to follow the rule, don't you? We sure would, because the rule keeps both you and the driver safe. And trading is no different. Because you want to be a better trader, it makes sense to follow the rules to increase the odds of your overall success. That being said, let's jump right into the general market rules. So rule number 1, you need to understand how support and resistance works on the daily, weekly, and monthly charts. Because again, all the best traders understand it and use it to their advantage. Support and resistance levels really do rule trading. So you ready to find out how to use them? Alright, here's how. To help you learn and remember how to use support and resistance, we came up with a little mantra to follow. The first thing you want to do is to trade toward it. Now as price is traveling up this little direction this arrow is heading towards resistance, this is where you want to be trading. The closer you get to resistance, the less you want to be trading because, remember, Paul Tudor Jones has made a lot of money at tops and bottoms. So once you get to resistance, you want to trade away from it. You really want to avoid getting caught in the trap of trading and still buying while at resistance. Alright? Now, if it does happen to break through resistance, no problem. You just keep trading after you break through it, trading toward the next level. Of course, this is a buy example, so the same thing would be in reverse or the opposite if you were in a sell trade. And again, you want to trade as soon as you possibly can after the break of a new level or when you still have a lot of room toward the next level, because as price is traveling, it doesn't always make it all the way to the next resistance level. Sometimes it stops a little bit short. Alright, so let's jump over to the charts for just a quick minute and show you a few examples here on the pound dollar. Okay, so here we are on the pound dollar chart on the daily chart. And you can see here that we have these levels of daily support and resistance. In fact, I'll draw another one right here. And these are the significant tops and bottoms of daily chart. And you can see that as price rallied off that, boom, came down and created this level. It didn't exist prior to that. Comes back up to the level, hits it, and drops. Now that's over 100 pips in this drop. Goes back up to this level, pops through a little bit, and then once again sells off. 200 plus pips down. Hits this support area. Now remember what we're talking about. When you hit a support area, you look to trade away from it. Comes back to the same level, rejects, and pops up again. This time, and when it comes back up to this level, it closes through it. And then it drew back to that level. The resistance became support, and price traveled up to this spot. Now, like we said before, the sooner you can get into a trade after a level is broken, or when you can tell that a market is moving off of support or resistance, the better, because it doesn't always make it all the way to support and resistance areas. Then you can see it came down and created this support area and bounced, held up, and then it came back and broke this level, retraced back up, and sold off again. And then there was this level, and it hit this level, and it bounced the first time, quite a few pips, very, very close to it. Next time around, it came down and broke it, came down and did what? Hit this next level. And what did price do? It doesn't look like much. This is the daily chart, though. It bounced almost 100 pips. Then once it finally broke and closed through, then it sold off and created the new support and resistance. And then more recently, you can see that price had a top and a bottom. And then when it came back down and retested this low, it broke a little bit and flipped over. And when you can tell it began to reject the support, that's when you start buying. Then when it hit resistance, it did close and break through, but guess what? It pulled back and bought a little bit. Again, 80 to 100 pips off this area. But then once it closed back below that level, now this resistance is rejecting. And the sooner you can get in after that happens with your system, the better. Comes back down and checks out this low again. Boom, what happens? Rejects, so it's not showing that it wants to break through. And now you start buying again. Comes back up to these levels in this area up here. Shows rejection like it did. Boom, drops back down. Comes back down to the same support area again. Rejects, goes through. Right? The market does this a lot. Now sometimes it breaks, and there really is no support that it's retesting because you've gone through all of it. So it's just a lot of selling down through those areas. Now right now I would add a level right here because this is a new little significant daily area. Now when you go to the monthly chart, you can see that not incredibly surprised we're bouncing from down here as we're approaching this big monthly support over here. And we have the tops and bottoms of these candles. This has created a new monthly support. So if price did make it back down here, I'd be watching this area very closely to see if it's going to bounce. And if it bounces, I want to be a buyer. If we break back above this monthly top, more buying. So as you trade towards support and resistance, once you hit it, you look to go the other way and trade away from it. If you break through it, you look to continue to the next level of support or resistance. And the same thing goes for the weekly. You can see these levels on the weekly chart too. The tops and the bottoms in these significant areas. Learn to trade towards support or resistance. Trade away from it when you get there, or trade toward the next level after breaking through. Now step number 2 is you want to have a repeatable way to easily identify accurate areas of support and resistance on the daily, weekly, monthly charts. By now we're sure you can see why this is kind of obvious. Because the big traders are doing that. And you want to do it as well. Just ride the wave they're creating rather than fighting against it. When you attend the upcoming webinar, we'll show you one of the most easy and effective ways to do just that. Now step number 3, you want to use a reliable trading system to time entries that fall in line with the general market rules. When you have a good system, you can use fairly tight stops to enter trades and have a high degree of success. And the truth is, you can use various different entry methods and do just fine, as long as you confirm that you're in line with the general market rules. Now if you don't have one you trust, in the webinar we'll show you one of our methods that takes no time to learn at all and has an 80% plus win rate. Step number 4, it's important to strictly adhere to profitable trade management with a minimum, I repeat, a minimum of 1-to-1 risk reward or better. This is important because being able to make at least as many pips as you risk, or more, keeps the pressure off you to have to be accurate. With 1-to-1, you only have to be slightly better than 50% accurate on your entries, and you'll still make money over time. As you probably already know, when the pressure is off, it's way easier to get your desired result. Now we say 1-to-1 or higher here because anytime you can get better than 1-to-1, you should. This is because, the higher your risk to reward, the less pressure you have to be accurate. If you can have 1-to-3 risk to reward, like you would if you had a 30 pip stop and a 90 pip target, then you only have to win 30% of the time to still be profitable overall. Now in this example, in taking 10 trades that only win 30% of the time, you would take 3 winners at 90 pips each for a grand total of 270 pips. You would also take 7 losers at 30 pips each for a total loss of 210 pips. Now this would leave you with a net profit of 60 pips and overall profitability. The truth is that risk to reward is hugely important because it allows you to not have to be perfect in your trading, but still enables you to be profitable. Wouldn't you agree? Well, we hope you've learned something really great and valuable from this training today, and that you'll apply it to your trading. By now you can probably see that staying in line with the general market rules really is the best way to trade. Now, just a quick reminder about the upcoming webinar this Wednesday at 10 a.m. Pacific time. If you're not quite sure when that is in your time zone, just Google current US Pacific time, then quickly figure out when that is in your time zone so that you attend the webinar on time. Now once you have that figured out, remember to set a reminder in your phone. And again, we'll also be available to answer all of your questions at the end of the webinar. So we look forward to you coming to the webinar so we can get to know you better and show you even more techniques that you can easily use to improve your trading. Alright, so we'll see you there.